Hello and welcome back. When we just look at the markets, I think markets have given up about, they're flat, they're 20 points from the day's lowest point. But let's welcome in our next management. The management at Crompton Greaves Consumer is with us, Mr. Matthew Job, Executive Director and Chief Financial Officer. So thank you so much for taking out time for us. Firstly, on the recent acquisition of Butterfly Gandhimathi, by when do you expect the integration to complete and synergy to start to follow?
At the moment, obviously both Butterfly and Crompton are listed entities, separate listed entities. I think the process itself in terms of consummating the deal, especially in terms of making the open offer and so on and so forth, will take at least another couple of months to come to conclusion. Our focus in the short term, and I say short term is 3 to 6 months, is to ensure that we are able to run the Butterfly business at least as well as it has been run for all this while. Hopefully hopefully there will not be much disruption either because of the pandemic or any other reason. And our objective in the short term is to get the business chugging along nicely. I think in terms of possible integration or any kind of process going forward, the boards of the two companies then need to decide, what is in the best interest of all stakeholders. Now, having said that, I think in terms of synergies on the cost side and synergies in the growth side, actions will start in terms of trying to first, figure out what are the real opportunities and what do we do first, and then get those into execution.
Okay, help us with some numbers, Mr. Job, then. Butterfly Gandhimathi is expected to cross 1,000 rupees sales mark in FY22 with 9 to 10% operating margins. And analysts are now pegging that combined revenues can scale over 10,000 crore by FY25. Is that a fair estimate?
We are still a few days away from the end of the financial year. So it would be still, we are not 100% sure where the Butterfly Gandhimathi will actually end up this year. We will get to know maybe in a few weeks' time. Now, having said that, I think the combined entity, will definitely already be in FY22. I think somewhere around 6,000 crores plus. That is, I think, realistic to expect. And that, of course, one needs to also keep in mind that this 6,000 plus crores, which will happen in FY22. Also has some, detrimental impact of the pandemic in the base, because almost for 45 to 50 days in the year, the businesses were not running as well as it should have because of the pandemic. So obviously there is a slightly, I would say, underperformance in the base, primarily because of the pandemic. So we do see that, this can really grow. So FY22, 6,000 odd. I think obviously, our expectation is that the appliances business, which is a combination of the appliances business of Crompton, which has been growing 40% over, per annum over the last 2 to 3 years, and Butterfly Gandhimathi, which has been growing at 20%, CAGR for the last 3 years, that combined business should be able to do at least 25%, growth going forward.
How has the demand been in the summer season? Have dealers started stocking up ahead of the summer season?
I would say that, I think in the last 2 years, obviously there has been significant impact of the pandemic right in the heart of the selling season, which is for us March, April, May, is really heart of selling season. Both the last 2 years, there has been a significant impact of pandemic. This year, obviously, the pandemic wave 3 happened in January. Things had started looking much better. But what has happened in the last few days or a couple of weeks with the situation of Ukraine, there has been significant impact on commodity costs, and that is something which is unpredictable, and which also I think will keep the demand unpredictable going forward. Because just to give you some perspective. In the last 4 weeks alone, the movement of commodities in the last 4 to 6 weeks alone, can have, on our own product lines, anywhere between a 5 to 7 or 5 to 10% impact on increase in terms of cost of products. So depending on how long the situation lasts, I think there is a possibility that that Crompton and many other companies in the industry will need to pass at least part of the increases down to the consumer. And this is on the back of a 15 to 20% price increase, which has already been done over the last 1 year. So there are some unpredictabilities and some adverse situation in the overall. But we hope that because you can already feel the weather is getting very hot. It is expected that the summer will be harsh and long. So we hope that even in spite of the commodity situation, which is not exactly supportive, that we should see reasonably good demand.
You're expecting reasonably good demand for the summer, but does that mean that you will be taking that price hike that you talked about of around 5 to 10% in the coming months?
So I would say that the inflation, the way we see it now on the cost of our products for a quarter, which is April to June, is likely to be anywhere between 5 to 10%. I think, this is our best estimate today. But the prices of commodities are getting revised almost every day or every week. In the past, what we have done is, we have managed any such cost increase through a combination of three things. Through a cost saving program, through improved mix, and obviously by passing some of the increases down to the consumer. For the last year, for example, the cost inflation was nearly 30%. But we passed about 18% average price increase. The rest was managed between mix and cost. And that would be the same thing going forward. We see a 10% cost inflation potential in the next 3 months. We think that roughly half of that at least, will need to be passed on in terms of price to the consumer. And the rest we should be able to manage through mix and cost. Now, how much exactly will happen in terms of price will depend on competitive scenario and how things pan out. We have already announced or informed our channel partners that there would be a price hike in the month of April.
Right. So, could you also just tell us about the cost increase, which you just told us in detail, as well as about e-commerce share? How do you plan to gain traction from there?
See, e-commerce currently contributes, I would say, overall for the company, roughly 5% of revenue. But one needs to keep in mind that, for example, pumps, there is no online, real sales. The big part of online sales that happens for us as a company is primarily in appliances and in fans. In those areas, I think it will be closer to 7-8%. A year ago, I think it was roughly half. So in a year, 18 months, I think since the start of the pandemic, maybe which is almost 2 years ago, the share of e-commerce has more than doubled. And I think that trend is likely to stay. The trend is likely to continue, because earlier people were buying. I feel that it was only for the sake of better pricing, but today it's convenience, it's mix, and so on and so forth that's available, or the choice that's available online. So I think that trend is likely to continue. But I will say that the general trade will remain, in the foreseeable future is next 3-4 years, a very big part of our business. But e-commerce contribution will continue to rise.
Mr. Job, thank you so much for joining us with all those insights. Appreciate your time today. But let's move on and talk about the other counters that we have been tracking. Tata Consumers as well as Tata Coffee are the two counters which have been in focus on account of the reorganization that Tata Consumers announced yesterday. What are the key details?